Broadcasting from the Allen B. Levan NSU Broward Center of Innovation at Nova Southeastern University. Welcome to Sunshine Startups Live, featuring rockstar entrepreneurs, bright ideas, and experts on the startup ecosystem. And now your hosts of Sunshine Startups Live, Jim Ryan and John Wensveen.
Hi, this is Jim Ryan, host of Sunshine Startups Live. Exciting to be broadcasting live from the Levan Center of Innovation. I'm an entrepreneur, investor, and startup enthusiast, and joined with my co-host, John Wensveen, CIO from Nova Southeastern University. John, great to be with you again.
Thank you, Jim. It's great to be with you. And welcome to the world's first theme park for entrepreneurs. This is a true public-private partnership that is really acting as an economic development engine here in South Florida that truly collides in a 54,000 square foot purpose-built facility. Entrepreneurs with academia, industry, government funders, wraparound service providers, professional networks, and a whole lot more. And I like to say the only model in the world that supports the entrepreneur from birth of an idea through successful exit or global expansion.
I love it. Exciting to be here again with another great episode. The purpose of the show is really to talk about the ecosystem in the state of Florida. It's been bursting in recent years, and one of the movers and shakers is Kathy Chiu, partner with DeepWork Capital based out of Orlando, Florida. And Kathy, thank you so much for coming today and sharing your story and your background and about the firm. So welcome.
Well, thank you for having me here.
So I want to start off with, you've been in the market for quite some time now, and I want to get into a little bit about the thesis of DeepWork Capital as a venture capital firm. But I want to talk about your background first, and you know, it's not usually a normal track to become a venture capitalist. So kind of take us back in time a little bit. You went to Ivy League, MIT, got your undergraduate, and then you wanted to go to Stanford to get your graduate degree.
Yes, I did that. So I was, I guess, born. My beginning of my career was electrical engineering. I did go to MIT for that, but soon after that, I became one of those number crunchers hiding in the back room of a finance consulting firm, and from that, obviously, I learned all about business, and so I went to Stanford for my MBA, which then took me into a lot of these business roles in technology companies. So I was actually in a startup that ultimately got sold to HP before some big crash. So it was great timing. And I was the first product manager there. And because of that, I ended up knowing a whole lot of VCs in that town, and that was in Denver. And so when the time was right and somebody was starting a VC firm, voila, I was recruited to go be the associate who read a gazillion business plans. That started my VC career. But fast forward to 2013, 2014. I'm now in Orlando. And one thing, I was running an angel group, and one thing that these angel investors, which are successful exited entrepreneurs, were investing in very early stages, hoping to help the new generation of entrepreneurs. One thing we were observing is, hey, the ecosystem is getting really good. Because, when you're not so sure, you can invest your own money in small drips and drops, but nobody will say, oh, let me go start a fund, and do this in a big scale. So we go, let's run an experiment. So my two partners and I, both of them are exited entrepreneurs, decided that we're going to try it. So our very first investment was a fintech company, and that company, that one exit paid back the entire fund, and the rest of it, whatever happens is profit. So that was obviously a very good proof point of this market, and by that I mean broadly speaking, the whole Florida market is really kind of mature enough for this kind of a flow to happen. So in 2018, 3 years after the first one, we started a second fund. And this time we said, we're going to add life sciences to it. And lo and behold, that one also was doing really well. We're now on Fund 3. We're also the investment manager for the state's series of venture program called Florida Opportunity Fund. So that's kind of how we got to the point we are. But I think the big aha moment at the very, very beginning was realizing that this environment, Florida, this whole underinvested environment, is now mature enough that it can actually support traditional investment kind of a required return.
So Florida is an interesting state overall, and many will say that it is undercapitalized, and I'm happy that you're seeing and observing that it is maturing. It's still considered the Wild West in some eyes, and that we're at the very beginning stages compared to other more established ecosystems that exist in the country and throughout the world. So I'm really curious from your perspective, where are we in terms of Florida as a state, as this innovation ecosystem matures around the themes of things like innovation and technology and entrepreneurship? And is it the state, or is it regions within the state that are doing better than others? I'm just really curious to get your perspective on all.
I mean, in a state as big as ours, and I like to say Florida has Swiss cheese geography, right? We have all these sinkholes and water.
I love cheese, by the way.
Yeah, I do too. Obviously, you do have clusters. There's always clusters. You know, if you go to the Bay Area, they're all in Palo Alto. If you go to Georgia, they're all in Atlanta. Not so in Florida. You have a kind of a spread around, which is good and bad. You know, the bad is that, you can't just everybody go live in that one city and expect everything to be there. You have to sometimes travel and even within the state. On the other hand, because of that, you're seeing a lot of specialization that are possible because people can have a smaller amount of money and just specialize on something. I don't know if people know this, but Florida has about 12 public universities, right? And altogether, just the public university, this is not counting private schools, they are doing about $2 billion of sponsored research. Think about how much technology and IP comes out of that. And half of it is in life sciences. And we also have a space coast, which means that we have a lot of what's really called, some would say deep tech. So these are fundamental technologies that, frankly, when they're successful, they can do nothing but, there's always, the possibility of more kind of tangential achievements, but a lot of them really could just change the world. That's the potential here.
So now let's dig a little bit into DeepWork Capital. Obviously, you mentioned earlier about this initial success, which is phenomenal and not ordinary for sure. Where is the funds today? What sort of thesis? What kind of companies are you looking for today in the fund?
Right. So I would say, you should think of us in two different layers. On the layer of stages and kind of the more demographic thesis, I would say that we are early stage and we focus on underinvested markets. And, in fact, when we started DeepWork, in addition to observing that, hey, the deal flow is getting really good here in Florida, it was also a thought of saying, I bet if you give certain, entrepreneur, and whether or not it's geographically bound or, by, they're constrained by some other things, if you can somehow remove the constraint, then that's going to be a win-win. The investors are going to have more reasonable valuations, and the entrepreneurs are going to have access that they didn't have before. So that's really the initial thought. And so when we started investing in 2015, and some of these deals was great, but their challenge was that they couldn't have the kind of access to capital. So their only other choice was to go move to Bay Area, move to Boston. And not everybody want to move.
Sure.
So when you take that constraint away and say, no, let's organize some capital here and fund the fundable, hypo businesses, then you create a real serious win-win situation. So that's kind of the thesis. And since then, we've been looking, what is the next underfunded opportunity? So when we went from Fund 1 to Fund 2, for example, when we started touching life sciences, a lot of people say, that's scary because now you have to have and we did have to line up a lot of scientific capabilities in order to do that. But it was worth it because, again, it was yet another underfunded opportunity. So, that's kind of in our DNA. It's like, what is the hidden gem and what is the opportunity? So fundamentally, that's what DeepWork is. Now, if you want to look at us from what does that mean in terms of, industry? I would say, a lot of VCs will say, okay, I can be a SaaS VC because, SaaS software is something that is more rhyme and reason, lots of numbers, you can kind of crunch and be predictable. Well, what about technology, the truly deep tech ones? that to us is like, well, that's where there are some underinvested opportunities there. So if you look at our portfolio, at the very beginning, it's like, yeah, the easy ones, SaaS companies. We do that, just like anybody else. But really what's kind of interesting and special is we also have a lot of deep tech. The question is, how do you look at it and evaluate it from a very commercialized point of view? Because otherwise you're not investing. Now you're a grant program, and that's not what we are. So I would say that's who we are. We are able to wrestle with some tech companies that others find difficult to evaluate.
So the area that you're in is going to be great music to a lot of ears, because what we often hear, particularly here in South Florida from entrepreneurs, is that the friends and family money is fairly easy to get. And then most of those companies don't become successful or even remain in business because they don't know how to get to the resources that they need to be able to scale. And then when they start talking about the angel investor networks, that, okay, it's relatively easy to find. There's more resources now than there were 3 years ago, 4 years ago. And then moving on to the venture capital and hopefully down the road, the institutional financing opportunities. So the area that you're in is interesting because you're going into that early stage. And one of the challenges that I often see is that if you've got the financial resources and you're looking for that opportunity, how do you find that early stage entrepreneur that's hiding in that basement? Maybe that's not a great analogy in South Florida because we don't have basements, but how do you find them working out of that garage so that they're connected to you? And I see that as a huge challenge, or is it not?
It's a art more than a science. And, number one is you can't just have a bunch of people. But in terms of methodology, what we do is that we try to identify the regional kind of a hub, kind of the hub-like people, hub-like entities, like yourself, where we go, okay, these people are standing in the midst of a lot of intersections. Entrepreneurs come to them because they offer something very interesting. So we build profound relationships. When we interact with a hub-like entity, sometimes we're there to advise, sometimes we're there to volunteer, sometimes we're there to screen all the inbound, the pitch competition deals. So we make very purposeful and intentional relationships that allows us to have really good and vetted. And obviously the fact that we're now also, managing the state's program helps a little bit because people go, oh, that's the group I should at least go lob a call into. And by the way, we actually have a program where we will allow any entrepreneurs to come and get the time slot just to talk things over. Now, obviously, the more prepared they are, the more that conversation is productive. But we also do that, an open door policy.
Okay. And you mentioned something, too, about the state model. Can you talk a little bit about what the Florida Opportunity Fund is?
Yeah. So the state, throughout the decade, has had different chunks of money that came to them, and so they have been investing in their different mandates, and I'm not going into details, but all collectively it's called Florida Opportunity Fund, and the purpose of that is to invest in innovative, high growth business. So usually it's what you would think of. It's the tech, the deep tech, the SaaS company, so it's that kind of company that would change the world and change the trajectory of the state's economics life.
I know you have access to a lot of deal flow. You probably look at a lot of syndicate opportunities as well. Obviously, being in Orlando, centrally located, how has the companies changed over time that have presented themselves to pitch? So, for example, in a few years ago, obviously, crypto was very big, NFTs, so forth. We're seeing a tremendous surge in AI related with the launch of ChatGPT and what have you. Are you seeing, what's the wave right now that you're seeing, and are you looking at a lot of AI-oriented companies?
There absolutely is a lot of AI, and I'm about to date myself. I don't know if you guys are that old, but I don't know if you remember.
John and I both have gray hair, so.
I didn't before I started this job, though.
I mean, a long, long time ago, for those kids who are listening to this, people say, oh, this is an Ethernet company. And turned out everything is an Ethernet company because at the end, that's just in everybody's tech stack. Nobody does. So I think when you listen to things like AI, when you listen to things like, you mentioned crypto, so blockchain, at some point, these becomes really just table stakes. When they become an important enough standards, it becomes table stakes. And so as a VC, I think it's important for us to watch when it's that crossover point where this is not necessarily novel. Now, however, before it cross over that, now you're fighting in the kind of the standard space. So then for a VC, our thinking will be like, well, are we big enough to be fighting in that? Because some of these standards, the implication is so big that unless you're a $1 billion, unless you're the Googles and the Microsofts of the world, a VC cannot really effectively, help a company fight in that kind of platform space. So what a VC would end up doing is they might play a very small amount in that, but really what they're looking for is like, when does it cross over so I can go and play in the application space? And so one of my old mentors used to say, and this is when we were all talking about AI in the terms of, so AI had gone through many iterations, right? At the very beginning, when people say AI, it's just like, oh, this looks like it's got some intelligence. So what it really was, it's really just algorithms, right?
Probability, statistically,
statistically, and it doesn't really have that true learning path that today's AI actually has. So you went through that. And so people usually say, well, my own mentor used to say, well, you have to watch here to say, after this AI, you feed it through this AI engine, does it give you a report or does it create an ongoing business decision? Anytime something happens, you stop. So, let's say in industrial companies, they had these, what they used to call the algorithmic things when they used to call that AI. What is important is to see that, oh my gosh, this factory is actually being monitored in all these different dimensions that truly is impossible for a human being to monitor. And that therefore, this is useful software. And that's a business you can invest in because it's sticky. Anytime something is just generating a nice demo, which is like, a report or whatever, or graphics, that's when you go, I don't know, because this may not stick, even if they're getting a lot of excitement. That excitement is entertainment excitement. So we look for things people need versus just want. So
you bring up a really important thing about looking for what people need. Is there a challenge that's out there right now that you just haven't found the solution for? What might that be?
So because we do life sciences deals as well, so that's almost unfair. I don't know if you meant to ask that question, but in life sciences, if you're going to cure cancer, people are going to want it. So when we look at our deals, there are two buckets. There's the tech deals and there's the life science deals. And we will say that and you guys are both investors, so you probably think about things the same way. There is the market risk. Is there a product market fit? There's a technology risk. Can you ever build this thing to make it work? So the two risks and the order in which you encounter them is flipped for technology companies and for life science company. For life science company, usually the market risk is minimal because you know exactly what the market need. Now there might be the format of how you go to market, but fundamentally that product, my gosh, if you cure this cancer or that cancer, usually there's a product market fit, right? On the other hand, but the technology risk is huge. So that's the bet investor is taking. You narrowed it down to that. On the tech side, a lot of times you prefer not to take technology risk because, if you're a tech entrepreneur, you should be able to build some sort of a minimum viable product in your garage without coming to me and asking me for $1 million so you can go hire a bunch of people to build it, So you're like, you got to have something. And then it's like, okay, what I'm really betting on is that the market, this really does solve the problem. Because one more kind of business, we call it Whitney. Wouldn't it be nice if business? Frequently you'll see entrepreneurs say, well, this is the problem. And then we spend a whole hour talking about the problem. And the problem's very well dissected and understood. But then at the end, you realize, well, there's not really a solution to this. So yeah, to answer your question, I would just say that's kind of how we think about it.
We had challenging times, always challenging times, but the last 5 years, COVID, inflation, supply chain issues, potential recession, and so forth. Florida has had a tremendous amount of activity for startups. Funding, not as much, had some gains, and so forth. Where is DeepWork Capital today with looking at, is the deal flow still there as it was in quantity? And what about quality?
So I will say deal flow wise, both quality and quantity is kind of monotonically improving and increasing. And you say why? Well, for one is the infrastructure is there. I think there is never really any lack of good ideas because, we're all humans and we all face a lot of similar problems. So some of the same problems keep on recurring. That's just human condition. Really is like, but what can you do in terms of building it? If you're a tech entrepreneur, how do you get past the kind of the go-to market? What I'm saying is that in every entrepreneur's journey, there is ditches that nobody's ever falling into. And yes, that's just name of the game. You're going to fall into those ditches. But as an ecosystem, how much infrastructure do we have to catch people from falling into the ditches that people have all fallen into 1,000 times, right? Let's not die unnecessarily is what I'm saying. And I think in terms of Florida, just look at how much incubator, accelerator, entrepreneurship center, even John, yours, just a year old. The infrastructure is there, and to catch people from unnecessarily kind of losing when they could have been at least jumping through to the next phase and live to fight another day. So I think that's why you're seeing much better quality and volume, because they're not dying on the vine and burning up all that capital that maybe should be funding something that has a hope.
Can I ask you something about the space economy? So South Florida has traditionally been disconnected from the Florida Space Coast, the National International Space Systems, and we actually launched a space partnership program here as a partnership with the Space Foundation. And what we're finding is that a lot of entrepreneurs that are in different sectors don't even recognize that they can actually, with a slight pivot, be a space company or support the space economy. And people have a tendency to stay away from space. It's very glamorous and very sexy, but scary, and the belief that you need a lot of capital to be able to be successful. I know that you have an interest in space, and I'm really curious about where you see the opportunities for funding, and where do you see the future of space going?
Right. So again, earlier we had talked about the life cycle of a kind of tech trends, right? You start out with the platform, and big guys are battling over the standards, and until they get to the end, all of a sudden now you're in the application space, and proliferation of application makes a lot of startup possible. So I think the reason you're seeing more space become fundable now is because initially, if there's nothing in space, there's no applications or anything that could be had. So now that's when you're seeing Elon Musk and Jeff Bezos duke it out, and none of us really have the kind of capital to play something like that. But once you have some, space, some satellites already launched or ability to launch that, and also it's also important that there is a market usage, right? Always got to have a usage scenario. So when 5G came along, that's when you start seeing a lot of these satellite launching companies become a thing, because it's like, well, the only way you can support that kind of bandwidth is to have that. Space becomes a usable. There's now an application for it. People are very pragmatic. We can talk about, well, wouldn't that be nice? Dream all you want, but usually when there's like, oh, I can see how in these so many steps, it will become a business, makes money, and people won't just keep on, begging for grants. That's when it becomes a very hot trend that entrepreneurs go after. So space, where is it at? Well, it's now where, if you can get certain bandwidth, you still need to go last mile. And last mile now, that allows a lot of little companies to think, okay, if I want to do last mile, how does that change the software? How does that change the, some of these, let's say, fixed wireless technology, and how do you receive, the beam that comes down? So once you have that, now you're going to see a lot more startups, because now they're solving a lot more point solution that can blast openable obstacle.
So I mentioned earlier about funding and in comparison to some of the markets, Silicon Valley, obviously Boston, New York, they get about 80% of the funding for a lot of the startups and so forth. What do you see, and you've been in the market now for quite amount of time, what do you see as some of the ingredients that needs to be in this soup here for us to maybe not necessarily compete, but increase the opportunities for funding for a lot of the startups? What are some of the, whether it's accelerators or what have you, what schools, university systems, what needs to be part of that ecosystem?
So if you think about the ingredients to build a really successful ecosystem, right? It's technology, all the IP, the research institutions. Then it is some maybe corporations that can spin off, executive talents. Then you have, obviously capital. But then finally, it's entrepreneurial talent. And what I think the most mobile is actually capital. Because frankly, if an ecosystem, for whatever reason, had managed to get a bunch of really interesting deals and all those entrepreneurs, I'm going to put my company down here, capital will go push a button and then they'll show up, right? But you have to be compelling. So what has been difficult is to get those people here. And now if you look at who has moved in and just go to the newspaper and see all the big VCs that now showed up, and they showed up because there's, deals here. And if you look at, and earlier we're talking about the earlier part, the research institution has always been here. We've just been supporting a big brand drain because we didn't have the rest of it to catch it. But now that, the fundamental, the front end, the IP, kind of the IP generation, technology generation engine is there, then you started building, for the past decade. I mean, how many incubator accelerators have you guys keep on hearing? Oh, this town just had another one. So we started building up an inventory of that. And now if you look around the state, the pitch competitions and the accelerators, they're starting to become really good in that they understand what they can do and they understand what they can't do. It is a program. So what you're doing is you run people through it so that they can solve all the solvable problems. And then at the end, they do have to stand or die on their own. And so I think that's a very healthy second step program we have. Capital is a problem we have been solving. And I think, do we have the most amount of money? No, we don't. But on the other hand, when you have the right deals, now because they're these seed, like we fund in these early stages for that purpose. Once you can get them to an attractive looking deal, then outside capital becomes, feasible. And finally, it was people. And I'm very excited, if you look at the news, we like to talk about, such and such celebrity investor is now here. It was like, that's great for the state because it shows that this is now, at the point where it can take off.
So my final question for you is, let's look into your crystal ball. 5 years from now, what does the state of Florida look like in terms of the environment for entrepreneurs and securing those financial resources? And where is DeepWorks in that model?
Well, I hope DeepWork will be funding not just in early stages, but also a little further down in the stages. And the reason for that is because I do think if I think about where the capital kind of what they call the valley of death, it is a moving target, right? I think at the very beginning we're like, oh, things are dying on the vine, and so you see all these incubators and little grants and pitch competitions, and then now and a lot of angel groups got formed that way. Actually, you guys all participate in angel groups, and you know what kind of good you did, when you invested in those, and hopefully, some will come back and pay you back. But that gave a lot of companies that very first breath. Right. And then you see all these early stage VCs being formed. And what we're trying to take them is to the point where a private equity shop, or forget that, even just the later stage VCs that currently maybe doesn't exist here, will find that attractive. And so I think in 5 years, hopefully we can be following the bulge or following the valley and be addressing the problem where it's at.
So the 30-second advice that you would give startups, entrepreneurs watching the podcast today, if they were to see you, and they have a very small moment of time with you, what would be the 30-second advice that you would give that startup entrepreneur today?
I would say if you can actually tell me in 30 seconds that what your company really is all about, what is the aha moment for you, that's huge. many pitches I hear will go on and on about the what's, and you never understand what they're solving, So the ability to say, this is problem solving, and this is my solution, and this is why it's unique. If you can even just say that in 30 seconds, or heck, I'll give you 3 minutes. So, and most importantly, that's what allows you to actually focus. Because until you get there, you don't really even know. And then you shouldn't be just keep on chasing investment dollars, because it's a waste of your time. You can be solving a lot more problems that requires no dollars, just by figuring it out.
And how do these startups reach you and reach the firm?
Yes. So if you go to www.deepworkcapital.com, I feel like an infomercial. There's places where you can grab a slot to talk to us, and obviously the more prepared you are, the more useful that time is. Or sometimes we're all around the state going to conferences. You can definitely come up and talk to us. We don't bite. So those are all good ways. Or maybe you prefer to email us a deck. And it is important to have some sort of overview materials, because we do get approached by people who says, hey, can I just kind of talk to you for a minute? Can I call you in the middle of the night? And I'm like, yeah, that's a little scary there.
For sure. So,
yes.
Kathy, thank you so much. Thank you for being a champion for us in the state of Florida for a lot of the activity for startups. And Kathy Chiu, DeepWork Capital, thank you so much for being on the podcast today.
Thank you for having me.
Remember to subscribe, like, and share the Sunshine Startups Live podcast, and follow us on social media. If you're interested in sponsoring or appearing on the show, please email us at booking@sunshinestartups.live.